Good day, everyone. My name is Rebecca Lilly for the International Association for Energy Economics. It gives me great pleasure to welcome you to today's webinar entitled Carbon Tax Design Architecture for Developing Countries. We are grateful to Dr. Govinda Timosina for today's timely discussion. First, a little bit about the International Association for Energy Economics. We are the largest association specializing in the field of energy economics and provide a forum for the exchange of ideas, experience, and issues among professionals interested in the field. The organization produces 2 professional journals, a newsletter, and holds conferences and virtual presentations, along with a host of other products and services that you can find at our website at www.iaee.org. If you're not already a member of the association, we welcome you to join. A few housekeeping matters in regard to today's webinar before I hand things over. First, this video is being recorded for those that cannot participate in today's live event. If you have questions for our panelists, please click the Q&A button at the bottom of the Zoom window and type your question. We have allocated time at the end of the webinar to read and answer them. And now I would like to introduce you to our speaker, Dr. Govinda Timosina, Senior Research Economist at the Development Research Group of the World Bank. Govinda, over to you.
Thank you very much, Rebecca. Hello, everyone. Good morning, good afternoon, good evening, wherever you are. Let me share my screen. Okay. First of all, I'd like to thank IAEE for hosting this webinar on very interesting topic, a very timely topic on carbon tax design architectures for developing country. So what I will discuss today is basically I will introduce the carbon tax. Then we directly go to the design aspects. So how we design carbon tax, from which perspective, so it will be convincing to the developing countries, whether the carbon tax is designed based on the economic perspective to fulfill the economic objective, from the distribution or social equity perspective, purely CO2 mitigation perspective. So which is the objective of designing the carbon tax, because the design parameters, the design architectures would be different depending on the objective of the carbon tax. Then I'll go a little bit about carbon tax rate design. Then I'll go about discussing co-benefits, which are very important coming from the developing countries' perspective. The environmental benefits and the fiscal co-benefits are very important. Then I'll conclude. Then we'll have a time for the Q&A. So my thought is that unless you have a very burning clarification question, maybe you can hold your question until my presentation is over. Then we'll have enough time for the Q&A. So I'll try to wrap up in 40 minutes so that we have 20 minutes for Q&A. So this is the standard disclaimer. So this is my personal view, does not represent the World Bank, my employer. And also one footnote I'm putting here, the result presented for Ethiopia case study is still preliminary. They haven't published it. Maybe we should wait until they're published to cite them. So let me go to the introduction. What is carbon tax? So carbon tax is a levy imposed on sources of CO2 emission in proportion to their carbon intensity, following the polluter pay principle. So this is the principle which is quite known since 1920. So introduced by Arthur Pigou, British economist. So it's about more than 100 years ago. So the same principle, but applied on the CO2 emissions. So how it is applied? So it could be a direct tax on fossil fuels in proportion to CO2 they emit while producing the same amount of energy, which is heat energy, gigajoule. For example, while producing 1 gigajoule of heat, coal, fuel oil, and natural gas emit respectively 98, 77, and 56 kilograms of CO2. What does it mean? If a carbon tax reduces 1 gigajoule of heat, then it reduces 56 kilograms of CO2 if the heat or the energy coming from gas, 77 kg of CO2 if the energy coming from fuel oil, and 98 kg of CO2 if the energy is coming from coal. So what does it mean? The carbon tax basically penalize the fuel that produces more CO2 emissions. So it can also apply from the output side. That means it could be a taxes on outputs in proportion to their CO2 intensity. That means any product. So if they are more CO2 intensive, for example, electricity produced from fossil fuel, cement produced from cement industry, so they are carbon intensive, so they can penalize more through the carbon tax. And so how does it work? It works through the many channels. First is the fuel price channel. That means carbon tax increase the price of fuel. Then the second one is the substitution channel, when the price of carbon intensive fuel increases. So it is substituted by the less carbon fuel, the no carbon fuel like renewables. Then also product price channel. So that means it reduces the demand for carbon intensive products because the price of carbon intensive products goes up. Also, it works through the product substitution. So substitution of the carbon intensive products with the less carbon intensive products. And also it works through the technological improvement, basically from the energy efficiency improvements. So the carbon tax, it has been introduced in some countries around the world. This graph shows that these are the countries where both carbon tax, the emission trading system, and both are already implemented. We can see the red color is ETS, which is emission trading system. The black color, the dark color is a carbon tax, and this orange color is both carbon tax and ETS applied in these countries. So there are 68 countries. So they have introduced so far either carbon tax, emission trading system, or both. So they cover 23% of the global GHG emission in 2021. Coming from the developing countries, very few developing countries, so they have introduced carbon tax, particularly South Africa. There are some developing countries, so they are planning to introduce carbon tax. For example, Pakistan, we can see Thailand, also Vietnam. So not only carbon tax, so they are planning to introduce either carbon tax or the ETS. So this is the situation right now. So let's directly go to the design aspects. So what are the design aspects? So here, most of the information coming today in this presentation coming from my work, my studies. These studies, so two studies are already published. The first one is, this is the economic impact of meeting China's NDC through carbon taxes with alternative scheme for recycling tax revenues, just published this month. And the other paper is published last year, which is carbon tax in an economy with informality, a CG analysis for Cote d'Ivoire, so in Africa. And also I'm presenting a result from Ethiopia, study is going on. So I have a preliminary results, but this result will be published soon when the study is complete. So let us go the designing of carbon tax from the economic perspective. So if the objective is to either to reduce the loss of, it's like this, if the objective is to make the carbon tax policy economically efficient, that means if it is reduces GDP, that means it should reduce the minimum GDP. If it increases the GDP, then it should increase the maximum GDP. So in that case, so how we can do it? So there's many alternatives to design the carbon tax. So here what I'm doing, first I'm comparing carbon tax with the standards. This is the case of China. So if China wants to reduce, if China wants to meet its NDC, nationally determined contribution by 2030, then one option is that China can just introduce, okay, this is our standards. So we have to meet this, so we can have any measures as we like, or whether it's a command and control, whether there is a government direct intervention. So whatever might be the measures, but the objective is to achieve the given CO2 reduction, which is China's target is 65% reduction of emission intensity from the level of 2005. That is the China's NDC target. Now, to achieve that target, if a carbon tax is introduced, and if the carbon tax is not introduced and the standards is imposed to achieve this target, what happens? So it's about, so our studies show that about 10.5% GHG emissions should be reduced from the baseline in 2030. And so then the carbon tax range, I will come later. So what is the carbon tax needed? But to achieve that, the carbon tax reduces about 1% of GDP if there is no pricing instrument, only the standards, the national CO2 standards. But if carbon tax is applied, then what happens, the impact on GDP changes depending on how the carbon tax revenue is recycled to the economy. For example, if the revenue is recycled to subsidize wind and solar, so the GDP loss would be about 0.53%. But if the carbon tax revenue is used by the government, the way is normally used in the baseline, so public consumption and public investment, then the GDP loss is 0.185. So if the carbon tax revenue is recycled to household directly as a lump sum transfer, then it is slightly lower, 0.183. If the carbon tax revenue is used to cut corporate income tax, then it is slightly lower, 0.153. And finally, if the carbon tax revenue is to cut the capital tax, it goes further down, which is 0.116. So although the numbers are not very different, because, but, in absolute terms, so they are significant. So what does it say that? First, there are two messages we can come out of this graph. First, a carbon tax, no matter how the tax revenue is recycled, is better than the standard to achieve the same level of CO2 emission reduction. That means that to meet the NDC target, number one. Number two, a carbon tax with the tax revenue recycled in the sectors, in the purpose where the most distortion is occurring, for example, the capital tax created most distortion in China. So that will produce the most benefit. That means the GDP loss would be lowest. Here is 0.116. The other important message coming from here is that if the tax revenue is recycled to promote renewable energy, it is not necessarily, it is good from the environmental perspective, we can come later on, but it is not necessarily the most economic option to achieve that CO2 reduction target. So now there is a carbon tax, but so if we want to compare the carbon tax between the countries, this is a bit difficult because so we don't know what is the benchmark. So what I'm trying here is that, so what is the percentage change in GDP per unit carbon tax? This is the case of China. We can see again, this is only the carbon tax. We can see here, so how much percentage GDP change in China if $1 of carbon tax is imposed. So we can see the number here. So the GDP loss is lowest when the carbon tax revenue is used to reduce the capital tax. And so it's highest if the government doesn't do it, and basically it's used the way it used in the baseline, which is public consumption and public investment. So what happened in the case of Cote d'Ivoire in other countries? So in Cote d'Ivoire, there's a drastic difference is that in China, these are all losses. We can see negative. But in Cote d'Ivoire, so there is a losses in one case, but there is a gain in the other cases. For example, if it is used to cut the production tax, or the cutting the VAT, or cutting the labor tax, that means the carbon tax causes a positive impact on GDP. This is very interesting. We are coming from the developing country. I'm telling that the carbon tax could increase the GDP, and I will explain why. So this is the case of Ethiopia. In Ethiopia also, so in other cases, it decreases, whether it's given to the household, government use, investment, but in one cases, in the capital tax cut cases, it increases. Now, there is a two important messages here also. One is the number, the magnitude are significantly different, even a multiple of maybe 100. But the pattern is somehow looks a similar one. That means when the carbon tax revenue is used to cut the capital tax, so either the GDP loss is the minimum or there is a gain in the GDP. Now, why the results are different in the magnitude? The reason is that, so it depends what is the energy supply mix. In China is much more fossil fuel intensive economy compared to Ethiopia and Cote d'Ivoire. So obviously a carbon tax, so would a carbon is expected to reduce the GDP because so it's a fossil fuel based economy mostly. Also the second thing also economic structure. So China is more manufacturing based economy, whereas Cote d'Ivoire and Ethiopia are more agriculture based economy. And the other important point is, in both Ethiopia and Cote d'Ivoire, they completely depend on import of all fossil fuels, Then what happened? A carbon tax basically penalized the fossil fuel, then it encourages domestic energy, which is basically hydropower. Both Ethiopia and Cote d'Ivoire has a good hydropower sources. Then what happens is that a carbon tax encourages domestically produced clean fuel to substitute imported dirty fuel. That's why it can cause increase in GDP. Now, let's go more detail on the design aspect of the carbon tax. One question is that, should fossil energy sectors be excluded from revenue recycling from an economic perspective? So our objective is to reduce the emissions. So now, if we give some of the carbon tax revenue to the emission intensive sector, then there will be a rebound effect. So I'll show another graph on that. So then the question is that, should we give back to the fossil fuel industry or not? What our analysis shows in the case of Cote d'Ivoire, where we apply $22 per ton of CO2 carbon tax, is so that if the tax revenue is used to produce the output tax, the production tax, then what happens is that if the tax revenue is recycled to all sectors, including fossil fuel, so there is a loss in GDP by 0.11%. Now, if fossil fuel is excluded, which is basically imported, so in that case, then there is an increase in GDP. Now, obviously, the GDP impact are much different between the scheme of the tax revenue recycling. If the tax revenue is recycled to cut the labor tax, then in both cases, there is an increase in GDP, but when the tax revenue is not recycled to fossil fuel, the economic impact, the GDP gain is much higher, even more than double, compared to the case where the tax revenue is recycled to all the sectors. So it has a very interesting implication. And in most of the studies, so I have seen in most of the cases, what the existing studies they do, basically they recycle all tax revenue to all the sectors using different criteria. But what we are finding here is that that is not the right design criteria. That is not the right policy, because we should not give the fossil fuel rebate to, we should not give the carbon tax revenue to the fossil fuel sector. Okay. Now, then, so we are talking about recycling the carbon tax revenue for the different purposes. So it could be recycled to the household, it could be recycled to the producing sectors, it could be recycled for lowering the different taxes. Then what is important, and so that is not also investigated much in the existing literature, is that, so do the criteria to reallocate the carbon tax revenue for the given purpose, for the given recycling scheme. So here, if the scheme is to reduce the corporate income tax, then so the impact on the economic impact or the impact on GDP depends how the carbon tax revenue is recycled, what criteria is used to recycle to these sectors to reduce or to cut their income tax. So we consider 4 criteria. One is, let's give the revenue, and so again, we are giving only the non-energy sector, because we already know it's not a good point to give the energy sectors. These are all non-energy sector. But even in the non-energy sector, so in one case, we give proportion their energy intensity. So the more energy intensive, so they get the higher tax revenue. The second one is that the tax rate. So if they pay the higher tax rate, corporate income tax rate, then there should be put some incentive by giving the more carbon tax revenue. The other one is the tax volume. They are different, tax rate and tax volume. The third one is that if the sector produce goods that are more exported, that means the production is more export intensity. So let's give the carbon tax revenue to the producing sectors based on their export intensity. Now it shows that, so the economic loss, GDP loss here, this is the case of China, would be minimum if the tax revenue is recycled to the producers to cut the income tax based on their export intensity. On the other hand, and which is quite intuitive, because if the energy intensive sector gets more, then so there will be higher loss in GDP. So the reason is that since the China's economy is relatively more export oriented, a carbon tax favorable to export oriented industry cause lower economic loss, which sounds quite intuitive. Now, the other question in the tax design is how much carbon tax revenue to be recycled? Whether all the revenue should be recycled, or part of the revenue to be recycled. In all cases, normally what we do, we keep the government revenue neutral. That means if the carbon tax reduces government revenue, so we compensate the government so that the government revenue remains the same like in the base case before the application of the carbon tax. But still then there is a more revenue because of the carbon tax revenue. But on that incremental revenue, whether all incremental revenue to be recycled or only part of should be recycled. So what we did, so we also examined this in the Cote d'Ivoire, where we have the producers distinguish between the formal and informal sectors. So that is some in-depth knowledge we are getting from the informal sector also. Then in the first case, what we did, the carbon tax was only applied to the formal sector, and the revenue from the formal sector is recycled. In the second case, carbon tax is applied for all the sectors, both informal and formal. Then the revenue, all the revenues, and even in the final consumption, like household consumption, and all the revenue is recycled to the economy. Then what happened in the case of production tax costs, there is a GDP loss, but what is interesting here is that the more revenue is recycled, the higher is the GDP loss. Looks like a counterintuitive. Interesting. On the other hand, if there is a positive impact on GDP, the higher revenue recycling causes higher gain in the GDP impact. This is also something we haven't seen in the previous studies, and this is what we got. Now let's go to the designing the carbon tax from the distributional perspective. So how does carbon tax affect household by income groups? So one of the key issue is that, and that is one of the political economic question from the developing countries, that carbon tax could be regressive. So that means it impacts more to the low income household rather than the poor high income household. That's why the politician and so they are a bit reluctant, and also there is a resistance from the public to accept the carbon tax. Now what our study suggests. So in all the cases, how the government revenue is recycled, whether it's government use, cash flow household, labor tax cost, capital tax cost, investment and corporate income tax cost. So we have 5 groups of household, quintile 1 to quintile 5. Quintile 1 is the poorest household, and quintile 5 is the richest household. And here the carbon tax rate is $20 per ton of CO2. So one thing is that we saw in the case of China, there is this is what I'm presenting is the household income. As in the case of China, so it's better to cut the labor tax on the capital tax than doing the other thing while recycling revenue. Because we can see from this graph, in these 2 cases, there is a significant increase in household income compared to others. But another important thing, what we need to notice here is that we see the trend. So in this case, the richest household the quintile household, they gain the highest because they are the one who pay the tax, right? So then if the tax rate is reduced, so they are the one who gain the most. And the quintile 1 household, so they receive the lowest. That means the carbon tax is regressive. It benefits more to the rich than the poor. Then the question is, and this is the very big obstacle for carbon tax, basically in the developing countries, because the politician doesn't want something like this. Now, is there any way how can a carbon tax be made progressive? So that means it benefits more the low-income household compared to the high-income household. So we found there's a two way. One way is that let's give the carbon tax revenue equally to all households. This is the lump sum transfer, the head count. And the second one is that let's give more carbon tax revenue to the the poor household than the rich household. So doing that, so what happened is that we can see the household income is much higher in the lowest income quintile compared to the high income quintile, and the carbon tax become progressive in terms of the household income. Now, what happens in terms of the GDP? We can see this is the GDP impact. But in the GDP impact, so this is again the issue of the equity versus this efficiency. So GDP impact is still the lump sum transfer. No matter we can see if all households get equal cash transfer, the GDP loss is 0.071. If the poor household get higher transfer, the GDP loss is higher, 0.074. Although the number is not that different. But if the tax revenue is used to cut the labor tax or capital tax, there is a positive increase in GDP. I mean, there is a GDP gain. So it shows that it's good if we see from the household income perspective, from the social justice perspective, a carbon tax can be made progressive. I mean, the rich household, poor household can gain more. But it doesn't mean so they are economically efficient. And this debate is not the the recently started debate. This is the debate since the start of the carbon tax literature and studies. So this issue of whether we should consider the economic efficiency or we should consider equity. I mean, the challenge here is that where is the balance, and this is so that's what the political economic comes here. So how to balance these two aspects. Now let's go to the designing the carbon tax from the purely CO2 mitigation perspective. We discuss about the economic efficiency perspective. We discuss about the distributional perspective. Now let's go the CO2 mitigation perspective. This is because the objective of the carbon tax is anyway to reduce the CO2 emissions. But here again, we are talking from the developing countries perspective. So the situation is that we have a carbon tax, but the carbon tax not only reduce the CO2 emission, but also it should not harm the economy. It shouldn't harm the poor people. So that that's why this objective should be a mix. Now, do emission reduction from the carbon tax change under different revenue recycling schemes? So what happened on the emissions? So we have seen the impact on the economy. So let's see the impact on the emission. Now, this is the case of Ethiopia again, where we apply $20 per ton of CO2. And we can see the change in emissions. So this $20 per ton of CO2 carbon tax reduces CO2 emission from 6.96% to 7.45% from the base case. So if it is the case, for example, if the revenue is given as a cash transfer to household, then the reduction is more than 7.4%. But if it is given to cut the corporate income tax, then the reduction is lower. This is very interesting. So this is just the contrary to the economic efficiency. In economic efficiency, if the revenues are given to cut the corporate tax, then there is a minimum loss of GDP, or there is a GDP gain. But at the same time, there is a lower reduction of emissions. So That's why, these three objectives, the economic objective, the CO2 mitigation objective, and distribution objective contract to each other. Then now, this I presented earlier also, should fossil energy sectors be excluded? So we saw it from the economic perspective. Now let's see from the CO2 mitigation perspective, which is quite intuitive here. So this is again the CO2 emission due to a US $22 per ton of CO2 carbon tax in Cote d'Ivoire. So we have two cases here: revenue recycled to all sectors and revenue not recycled to the fossil fuel energy and electricity sector. So when the tax revenue is given to cut the production tax, then we can see if the revenue is recycled to all sector, if the revenue is not recycled to fossil fuel industry, then the emission reduction is 9.65%. But if the revenue is recycled to all sectors, including fossil fuel, then half of the reduction is evaporated. So coming from 9.65 down to 4.28. So it's so that, how important, so the design of the carbon tax is, where to recycle, whether it is given back to fossil fuel or not, is so important while designing the carbon tax. So that is the production tax case. Even in the labor tax cut case, so it, the emission reduction decreased almost by 2 percentage points if tax revenue is recycled to fossil fuel as well, including other sectors. This is also a very important message while designing the carbon tax. Now, the other thing is that does carbon tax rate alter across the revenue recycling scheme? Now, what we are talking about that, now our objective is to reduce the emissions. Let's fix the emission reduction target and then deploy a carbon tax, employ a carbon tax, and how the rate of carbon tax changes across the revenue recycling scheme. Now, very interesting to point here is that, so if the carbon tax revenue is used for the rate subsidy, given to encourage, to promote the wind and solar, the carbon tax rate would be minimum because there is also emission reduction through the promotion of the renewable energy, minimum 16.1. On the other hand, so if it is given to reduce the corporate income tax, whatever the criteria is, so it is more than so except in the energy intensity case, is about $18 here. So it is 2017 US dollar, so $18 per ton of CO2. So this shows that again another interesting point here is that if we recall the economic impact were among the carbon tax were highest in the case of recycling tax revenue to promote the renewable energy, but the tax rate is minimum. On the other hand, if the tax revenue is recycled to cut the income tax, the economic efficiency, there's a minimum GDP loss or even GDP gain, but the tax rate are higher. This is quite counterintuitive. Normally we think that higher the tax rate, higher the economic loss, but that is not the case. What happens is there is a non-linear relationship between the carbon tax and the emission reduction and also the economic cost. So this is also something quite interesting because normally there is a perception that okay, let's give the higher carbon tax to reduce the higher emissions. But the important thing is that how we recycle the carbon tax revenue matters quite a lot. Now, these are the three aspects. So I basically discussed the economic objective, the distributional objective, and the CO2 mitigation objective. Depending on what is the objective, the carbon tax should be designed accordingly. And so this is a very important issue right now because many developing countries are showing much interest on carbon tax, and several developing countries they included carbon pricing, both carbon tax and emission trading scheme in their NDC package to meet the nationally determined contribution by 2030. The question they are asking right now is that then how to design the carbon tax? What is the best carbon tax they should have? So Again, and this presentation tried to answer that question, coming from the different angle, whether the objective economic efficiency, whether the objective distribution, equity, the distribution, and the objective purely reducing the CO2 emissions. And the results are quite contradictory. So that's why. So the situation is that the solution will be somewhere in the balance. So these three objectives should be balanced while designing the carbon tax. Now let's go to the carbon tax rate. What should be the carbon tax rate? The basic economic theory suggests, and we know this environment economics 1, 2, 3. Basically, carbon tax rate is equal to the point, intersect the point where marginal cost of abatement is equal to marginal damage, the social cost of carbon. So that is what the optimal carbon tax rate should be. So there is some studies that are also estimating the carbon tax rate basically to avoid the climate change. That means to reduce the CO2, to limit, not reduce, to limit the temperature rise at the 1.5 degrees Celsius, beyond the pre-industrial level. That means 1.5 degree target. Or Dice et al. So they find that, to meet that target, a carbon tax, which is a homogeneous carbon tax, universal carbon tax across the globe. So the carbon tax rate should be $85 per ton of CO2 in 2020, and it would be $145 per ton of CO2 in 2030, and is very high in 2021. It's a 4,550. It's 2021. So they are all in 2005 price. And there is also a report produced by Nick Stone and Stiglitz. They in 2017, they indicate that the carbon tax price should be 50 to 100 per ton of CO2 by 2030, which again by 2030, to achieve the 2-degree target in the long run. Bill Nordhaus also estimated the carbon tax rate by using the SCC, which is social cost of carbon. So it should be about $31 per ton of CO2 is 2015, and should increase 103 per ton of CO2 by 2050. This is all in 2010. So there is a lot of variation in the numbers, and we can see these variation depends, influenced by the assumption, the model they use, and many other factors. But it's kind of the range, so they are giving. For NDC, and if the NDC, the nationally determined contributions, are made using the carbon tax, and the Ian Perry and his team from the IMF, they estimate that the carbon tax of $35 per ton of CO2, which is 2070 price, would be enough in 2030, because the NDC target is 2030. So these are the carbon tax rates. So here we have a carbon tax rate already introduced in different countries. So there's a lot of variation. We can see countries like Sweden, Uruguay, they have, and we have Switzerland. So these countries, they have a carbon tax rate, which is a US dollar per ton of CO2 of 2021 price, which is more than 130 US dollar per ton of CO2. And so we can see the whole range here, and there are some countries so they are just introducing carbon tax, but they are so what is the case? So based on a study for China, a gradually increasing rate would be efficient. That means it causes a lower economic loss. Then a flat or fixed rate to meet the target, which is normally set in the future years. So that is what we got in a study we did for China in 2018. What we found here is that, so for the explanation, to meet China's NDC, which is 65%, reduction of emission intensity, 65% from the level of 2005. So what we found, a carbon tax introduced, which is about $10 per ton of CO2, 10 UN, not dollar, per ton of CO2 in 2015, and gradually increased to 157 UN in 2030. It causes 4% GDP. For meeting the same target, if we consider a flat tax rate, that's again introduced in 2015, then the flat tax rate would be 82 yuan, so every year. But it's a flat tax rate, it causes higher GDP loss, 0.4 and here 0.5. So that the gradually increasing carbon tax rate is more economically efficient, and that makes a lot of sense also. In a 1 year study done for US, a fixed rate of $43 to $45 to CO2, which is 2019 price, would be enough to reduce US emission 28% in 25 below its 2005 level, done by China and half state. But what they found here is that this is the flat rate, but the flat rate is influenced by the duration. For example, if the carbon tax is introduced 5 years ahead of the target, or it is introduced 10 years ahead of the target. So what happened is that if the duration decreased by 2 years, what they found, the rate increased by 9%. If the duration is decreased by 4 years, then the rate increased by 23% because there is not enough space to achieve the target. So that's why this is the issue of whether rate should be increasing or should be flat. Basically, in the developing countries context, because instead of they are penalizing right now to have very high flat tax, they should be allowed. I mean, they should use small carbon tax, and gradually they can increase up to the level maybe 2030 or 2040 to achieve their target. Now, what about the environmental carbon tax? So the environmental issues. So what happened is that the environmental co-benefits, they are, so we haven't done that many studies, but I am just referring some of the literature. For example, Lee et al. 2018 showed that US $72 per ton of CO2 carbon tax that reduces 24% of CO2 emission in China by 2030. Also reduces more than CO2, which is 25%, SO2 and 19% NOx. At the same time, it reduces PM 2.5 by 12%. That means the environmental benefits quite higher. The reduction of PM would avoid 94,000 premature deaths. So the corresponding health benefits are 3.7 times larger than the cost of carbon tax. So similar studies done in the US, so where $25 per ton of CO2 carbon tax introduced in 2020 and increased 5% annually until 2040 would produce US $71 to 162 billion health benefits by reducing PM 2.5. So similar studies are done from other countries also, and Ian Perry from IMF showing that as countries like Saudi Arabia, Iran, Russia, China, and Poland, they gain the most by introducing carbon tax, because the benefit of the health benefits, the local air pollution benefit is much higher. Even carbon tax can be justified based on the local air pollution benefits. Now that was about the environmental benefits, co-benefits, I like to say. Now, is there any fiscal co-benefits? So this is another question. So to answer that question, so what we're trying to do is that, so in Cote d'Ivoire, so we divided the sector between the formal and informal sector. Many developing countries, like Cote d'Ivoire, they are suffered with the informal economy. It's because, most of the producers, they don't pay the tax because, they run informally. Then what we did, so we imposed the carbon tax. The one good aspect of carbon tax is that so carbon tax cover both formal and informal sector because it goes to fuel and it's very hard to avoid the carbon tax. On the other hand, other tax like income tax, like a VAT can be easily evaded, so they can, but it's very difficult to evade the carbon tax. That's why one benefit of carbon tax is that, to avoid that type of leakage in the existing tax system. So what is so that then we ask the question whether carbon tax help, to encourage the informal sector towards the formal sector, where there is a movement of labor from informal sector to the formal sectors. What we see that it depends how the tax revenue is recycled. So if the tax revenue is recycled to incentivize only the formal sector, whether it is cutting the production, the production tax, also cutting the tax rate, the wage tax ultimately paid by the formal sectors. So in that case, so there is a clear indication that the labor from the informal sector move to the formal sector. So we can see. But in other cases, if it is given the cash transfer, if it is used for the VAT, so we don't see it because it's not possible to differentiate between the formal and informal sector when we are talking about the household, because it's very difficult, which household is formal, which household informal, cannot say. Similarly, so for the VAT, we don't know it's the product, and the product is coming from both formal and informal sector. We could not distinguish this composite product whether it's a formal or informal. That's why so that we don't see any impact of informal sector movement in those cases. Then we also try to see the what is the impact on the output, the formal and informal. Again, we can see carbon tax can reduce the economic informality if the carbon tax revenue is targeted to the formal sectors. So that what I just said, cash transfer to household and the reduction of that may not help to reduce the economic informality. So I'm almost done. So now let me, summarize. Summarize the key conclusions here. The main topic is. So if the case is, if the issue is the economic cost, so the most of the studies, including our study, except in Cote and Ethiopia, so they find the carbon tax causes negative impact on the GDP unless the environmental benefits are quantified. So that was the most of the data are saying, but more recent studies, including ours, they find that there could be net economic gains under certain design schemes. That's why the design is very important, how we design the carbon tax. Distribution impacts, carbon tax is normally regressive, but it can be made progressive with specific design architecture, particularly through the revenue recycling scheme, giving more revenues, recycling more revenues to the poor household, or equal, revenue to all household. Environmental co-benefits, it vary country to country depending on the level of the air pollution, but carbon tax could be justified based on the environmental benefit in many countries where the local air pollution is severe. In the case of China, that is what Ian Perry found. Subsidizing renewables, well, this is so there is a general perception that the carbon tax revenue should be used to promote the renewables, but the outcome is not necessarily the best if we see from the economic perspective. It is true from the CO2 mitigation perspective, but we are talking about developing country. So in that case, so there will be higher GDP loss if carbon tax revenue is used to promote the renewables. It looks like a little bit difficult to digest for the environmentalist, but this is what most volunteers find, and we also find. Fiscal co-benefits would help reduce leakage of existing taxes, VAT, and move the informal sector to formal part of the economy, again, depending on the revenue recycling scheme. Tax rate should be gradually increasing instead of flat and be introduced earlier than later to have economic efficiency. So finally, so the question is that should developing country introduce a carbon tax? So my answer is that conditional. Yes, but there are following conditions. If the carbon tax is designed in a way it benefits the country, even without accounting the co-benefits, for example, this is what we got from Cote d'Ivoire. If the economic loss of carbon tax is smaller than that in other policies to achieve the same mitigation target, like in China, because if the emission target should be achieved through the standards, then the economic loss is higher there. If the health and environmental benefits of carbon tax offsets its cost, because in that case, the carbon tax can be justified even based on the health benefit, or if the reduction of local air pollution is high as the reduction of the CO2 emissions. So that is what we saw in many studies. If it helps economic informality and leakage of existing taxes, for example, in Cote d'Ivoire, where the VAT rate is 20%, but effective VAT rate is only 4% because of the leakage. In that case, so it helps the government to maintain their revenue through the carbon tax, so they can swap part of, not all part of VAT with the carbon tax. And if it is preferred from distributional perspective, socially and politically favorable. So this is the political condition. I think this is about my presentation. So I think I'm in time. So I like to stop my slide here, and then we can go to Q&A. Yeah. So now the session is open. So if you have any questions, so let me know.
Do you have a question in chat as well as a question in Q&A?
Q&A, I don't see anything, so somehow
Okay,
I don't know.
I'll be happy to read you your questions.
Oh, okay, so I got one. So let me read on the Q&A first. In general, what kind of studies are these? Simulation, agent-based model, okay, expert policy evaluation. So thank you for the questions. So all these three questions are the simulation. So we use the computable general equilibrium models for all countries, China, Ethiopia, and Cote d'Ivoire. Thank you for the question.
So you have a question in chat, which is why is the carbon tax in Uruguay so high?
So the answer is I don't know, because I have to double check, because this is the number we got from Uruguay and just put it. But on the other hand, there are some countries, like Scandinavian countries like Norway, Finland, Sweden, they value more environment. Maybe Uruguay also, would like, something like that. If you're like a Scandinavian country and they would like to put the higher carbon tax. But I think that is what, we have it, right? And maybe the politician over there might know the better answer why they, impose such a high carbon tax. Thank you. Any other question, please feel free. I'd like to encourage. So I don't know whether we don't have so we have 20 participants, I guess. That was I can see from here.
Yeah. So maybe what you might like to do is, did your slide presentation contain your contact information just in case? Oh, there is I
have a question. Why you use example of China? My question is why not? I mean, what's wrong, having the example of China? Because China is a very important country, because this is the leader in emission, CO2 emission right now, and China is quite serious about reducing its emissions, and carbon tax could be one of the efficient instrument for China. They have already introduced ETS, which is emission trading system, but that ETS includes only the electricity sector right now. They are planning to extend that ETS to other emission intensive sectors. But those sectors are not only, they are not the only which are responsible for the CO2 emissions. So more, for example, household and other sectors are also responsible. So carbon tax would cover those sectors not included in the ETS, emission trading sector. So that's why the China's example is very important. Thank you.
So if you shared a slide that had your contact information, you can always encourage people to reach out.
That is that unfortunately I didn't put that one. But what I do when I send the slide to you, I'll put my contact address slides. Normally I used to do it, somehow I forgot this time.
Okay, great. Well, given that, IAEE would like to thank you very much for an outstanding webinar. This webinar will be available on IAEE's website for future downloads. If you're not already a member of IAEE, we encourage you to join by visiting www.iaee.org. We thank you for attending, and I would like to officially close this webinar.
Thank you very much, Rebecca and IAEE.